I'm expecting a massive crash, and I'm expecting a really, really bad crash, but it's a much different crash than most people expect.
Is the economic bubble about to burst? Today, we take a look at the macro outlook, from massive US debt levels to upcoming interest rate cuts, all the way to the elephant in the room, persistent inflation. Will we see a huge crash in stocks, real estate, and Bitcoin before the money printer is booted back up in full force? Or maybe this inevitable crash isn't like anything we've ever seen before. What's up, YouTube? Welcome to Pure Bitcoin Signal. I'm Hurley, Director of Content here at Swan. Now let's talk macro and Bitcoin. Today, I'd like to dive into the debated topic of whether or not we're on the verge of a huge economic crash, not unlike what we saw in the 2008 financial crisis. There seems to be at least two distinct opinions on this in the world of macro analysis, and that's that one, we will have a soft landing with no distinctive economic downturn, or we'll have a hard landing with a huge economic crash, which of course would take Bitcoin down with it before the money printer is turned back on in full force. Let me start off by saying I am in no means a macro expert. I rely on brilliant minds to make sense of the incredibly complex world of macroeconomics. Minds like John Haar, Lynn Alden, James Lavish, Dr. Jeff Ross, and Luke Roman, to name a few. Another sharp mind in the world of economics and investing is Mark Moss. He was recently on Natalie Brunell's podcast talking about his thoughts on an economic crash.
Some analysts that I've had on my show or I follow on Twitter, some of them are predicting a massive crash where Bitcoin actually tanks, everything across the board goes down. We've already seen things like real estate decline in prices in various states. Are you one of the people that are predicting a crash, then money printer, or sort of this like choppy sideways as they start to increase liquidity and coordinate with the central banks around the world?
So I'm not one of the doomers predicting a crash. As a matter of fact, I've been the opposite. So back to global liquidity. If you look back to October of 2022, I put a video on my channel, said there is no market crash coming, and here's why. In January, I made another video, said that there's no crash coming. I said, here's the Fed's pivoting. Here's the data. I made another video that said it's time to buy. I'm buying now. In August of 2023, I made a video that the bear market's been canceled. And I've been making videos saying that what we're really expecting, or what I'm expecting, is a crash. I'm expecting a massive crash, and I'm expecting a really, really bad crash. But it's a much different crash than most people expect. You see, a crash, if you think about a crash, what's everybody afraid of? A recession, a market crash. What does that mean? Well, if things crash, let's say what most people think, my retirement portfolio drops, my real estate, my home drops, I lose my job, I get a lower paying job, my business doesn't do as well, I don't make as much money. That's what most people think of. But what does that mean? What all that means is that the quality of my life would go down. The standard of my living goes down. I don't have as much money. So I have to now eat hamburger meat instead of steak. So really what they're saying is a crash means my standard of living goes down. But you see, prices don't have to drop for that to happen. Prices could go up so fast that my pay doesn't keep up and my standard of living also goes down. So it's a reverse crash. And while everybody's expecting a deflationary crash, I'm expecting an inflationary crash. Now, the results are the same. We both have a standard of living that's been reduced. However, I think a reverse crash, an inflationary crash, is actually much worse. And the reason why it's much worse is because on a deflationary crash, at least the market's reset and people get a chance to get back in, right? My kids could eventually buy a house. But in an inflationary crash, you never get another chance. It's just too late. And so I think that's where we're going. Now, will there be crashes? I mean, what is your definition of that? Of course, there's going to be massive volatility along the way, but I don't expect any long sustained depression. You know, maybe we see some sort of flash crashes, sort of like we saw in 2020, that probably last half the time, something like that, not tradable events, because it's going to be volatile along the way. I mean, if you look at the chart of the Weimar inflation, hyperinflation, and I'm sure you've seen it, right, with the red lines overlaid, the volatility was insane. And so we'll have that, but I'm expecting the crash up.
So Moss's take is that we will not see a traditional crash like we saw in 2008, where stocks and real estate prices tanked. But he thinks what we could see is a type of crash, but not one that we think of when we think of the word crash. Calling this a crash is a little bit contradictory, so maybe a better term is an economic explosion. And that's one where inflation takes off once again to levels that we saw and maybe even exceeding the levels post-COVID. Basically, the beginning stages of hyperinflation. And I think there's also a case to be made that we've already been in a recession as of late. It's just a much different type of recession than ones we've seen in the past. This is a recession where we're seeing a falling standard of living for most American families on the basis of high, persistent inflation. Moss argues that this outcome is actually much worse than a traditional crash, with the reason being that at least during a crash, the market resets and gives people the opportunity to get back in. Meaning regular people in theory can buy real estate, stocks, and Bitcoin at much cheaper prices before the inevitable money printer sends them to the moon once again. With persistent sticky inflation, the home prices, stocks, and Bitcoin never correct down, but instead continue to rise and leave millions of people on the sidelines. I'm starting to lean towards this being my base cases for what happens in the next few years, and there's one big reason why. And it's the insane US debt levels. After COVID, the US and many Western nations debased their currency at unprecedented levels. By 2022 in the US, almost half of all US dollars in circulation were minted during this short period post-COVID. There is still so much excess money sloshing around in the system. And this is why I don't think we've seen a recession in the way that many people expected, which is usually massive unemployment with negative real GDP. We did, however, see skyrocketing inflation over the last few years, which has been curbed slightly by the aggressive rate hikes in 2022 and 2023. The US debt is so high and growing so fast that keeping interest rates high is not sustainable. And that's why we've already seen talk of interest rates being cut, with the consensus being that the Fed will begin cutting by 0.25 or 0.5% at the FOMC meeting tomorrow. To put this in context, the Fed is planning rate cuts tomorrow, with the S&P 500 hitting new all-time highs today. Take a look at this tweet by James Lavish, who was quote tweeted by none other than Elon Musk yesterday. Today he said, "Good morning. US debt now stands at $35.3 trillion. If we were to return to 0% interest and make payments of $1 million per hour, it would take approximately 4,023 years, or until the year 6047, to bring the debt back down to zero. Have a great day." His point here is that trillions of dollars just sounds like an arbitrarily high number, but to the human brain, it's almost incomprehensible how large these numbers are. Another example I love that gives you an idea of how large 1 trillion is that 1 million seconds is approximately 11.5 days. But 1 trillion seconds is 31,500 plus years. The exponential growth from 1 million to 1 billion to 1 trillion is almost unfathomable. And our debt levels are so unfathomable that they can never be repaid. Eventual hyperinflation is basically guaranteed at this point. The only question is how long can the can be kicked down the road before it hits? Charlie Bilello pointed out the other day that Bitcoin and gold are the top performing major assets in 2024, and that this is the first time these two assets are number 1 and number 2 spots for any calendar year. So what do you think gold and Bitcoin are smelling out? So if you're like the millions of millennials and Gen Zs who hope to own a home someday, you could sit and wait for the deflationary crash that might never come, or you could start saving your money in Bitcoin now and start preparing for the inflationary reverse crash that may be much closer than we all think. And you can start saving in Bitcoin in minutes with Swan. Go to swan.com or download the app at swan.com/app and begin taking self-custody of Bitcoin today, where your first $10,000 in purchases have 0 fees. We also provide tons of services and educational tools to make your journey into Bitcoin as easy as possible. So go to swan.com to start your Bitcoin journey with the best Bitcoin-only financial services company around. So what do you think? Will we see a huge crash in asset prices before the inevitable money printer? Or will we see extended high inflation and a melt up in asset prices? I'd love to hear from you, so let me know what you think in the comments. Don't forget to like this video and subscribe to the channel for more Bitcoin Signal. Thanks for watching. We'll see you tomorrow. And until then, TikTok, next block.